What's good with y'all boys? It's your boy Chosen, aka NQ Chosen, aka Gray. We back with another trade review. It is episode 4 of Hoops to Futures. Yes, we making it. It's episode 4. We had a great day today. We took 2 trades today. We took 1 loss and we took 1 win. We made about $1,000 on the day. Just wanted to come on here, break down to you the setup. We had an A+ setup today. Want to show y'all what it looked like, give y'all the breakdown so you guys can see this, understand this on your charts, and implement this into your strategy as well. Let's get to it, guys. We're gonna start off on the 4-hour today. I wanted to see either new WOG or new week opening gap get filled, or I wanted to see the previous day's highs that we were targeting get tapped. So regardless, I wanted to either see a rejection or a fill completely of new WOG, or a run of our external liquidity on the higher time frame. So I was just gonna wait, see what price wanted to do, and you know what I'm saying, I was like these. I was ready to go crazy. I was ready to go crazy. All right, we drop on down the 1 hour. We want to see what kind of PD arrays that are gonna show and get presented to us when we get into the morning. We end up getting this 1 hour fair value gap that I did want to see us reject out of in order to go target London highs and Asia highs, and potentially this external previous day's high all the way up here if we were to be bullish. But I also had another trade in mind, or another framing of today's bias in mind. I did mark out the range from this low to this high, and we could retrace and be bearish all the way into equilibrium of this range, or we could even get to OTE of this range, because we do have a plethora of low resistance liquidity resting right above OTE of this whole entire leg. So if we're bearish, we have ways that we could target these lows. If we're bullish, we have ways we can target these highs. Always frame it like that. What's more higher probability? And then you let market show you what it wants to do, and you take the trades off of that. Let's drop on down to the 15-minute. Before New York opens, we get a sell side sweep. I'm showing y'all the whole bias on why price is doing what it was doing and how we ended up getting this bearish bias going into the morning. We get a buy side liquidity sweep inside of a 15-minute fair value gap at 5:30 in the morning. We did have news at 5:30, so this candle was kind of like that manipulation, that inducement candle into that gap. We swept buy side. And because of that, we want to see that be our protected high. It's our protected high because we swept liquidity inside of our higher time frame fair value gap. So if we are truly bearish, we want to see that high stay protected. That's your sauce for the day. Make sure you write that down, because it's actually some heat. New York opens, we dump immediately into this 1 hour gap, immediately taking sell side liquidity right here. And at this point, I've seen this setup a couple times before. As much as I wanted to be bullish, I kind of only wanted to be bullish if we got a nice V shape out of this initial 15-minute fair value gap right here, but we ended up inversing it completely. So this becomes a inverse 15-minute fair value gap, which is bearish as hell to me. Plus, there's a certain point when you get on the charts that if we dump a certain amount of points, at this point we dumped 243 points. That's a lot of points. That's kind of like, we're bearish today, period. Like, simple as that, we're bearish. Because there's been many times where I've tried to long after a 200 plus point dump, and it just doesn't work out. So today I wanted to change that. I've recognized that I wanted to see this fair value gap not only get disrespected, but I did want to see a continuation lower off of this 15-minute fair value gap that we created once we tapped into this 1 hour. And this is where my first trade comes in. We end up getting, we swept sell side and we tapped into a 1 hour. We end up getting a nice V shape out of this zone. At this point, I'm waiting. We end up inversing this fair value gap. I'm thinking, this looks pretty good. We're getting a literal actual V shape out of this zone. We have low resistance highs up here. Possibly, I'll probably, if anything, if I smack longs right here, stops would probably be at these lows, and then I'll target internal liquidity right here, because I expect this high up here to stay protected. So I'll mark this as red so y'all know this is protected. I want to see this be protected, so I want to take something internal, but we are fighting against a very large 15-minute fair value gap that is bearish after New York AM liquidity dump into this. It's just not, it's not the highest probability setup, right? What ends up happening instead, I'm waiting, I'm seeing this price still go up. We get this change in the state of delivery right here. I end up overthinking it. I smack longs right here and I put my stops here. Targets, initial targets, same thing, 1.75 R trade. I'm looking at this, I'm like, okay, we got our change in the state. We got a nice inverse. We're getting a V shape. We got a displacement candle. We just swept sell side. We're displacing out of a higher time frame fair value. Like everything is lining up for me. This is my checklist going off in my head. I have draws on liquidity, like everything's going off, right? But in the back of my mind, I'm still thinking, we just dumped 250 points. One, we are retracing into a bearish 15-minute fair value gap, which can easily just flip and continue bearish because this is also my other bread and butter model, my internal to external. So we could be going internal into the 15-minute to external back down to these lows and possibly target the rest of the lows on this entire leg on the higher time frame. So I have both of these in my mind. So I was weighing my options and I told myself, because this is a displacement candle, we did create a fair value gap right here. If we inverse this 1 minute, I'm gonna exit the trade and I'm gonna flip my bias short, targeting these lows down here. At this point, what happens? We inverse this 1 minute gap. I close my trade at the body closure. So at this point, I take a 40-point loss. It was like 500 bucks, right? Trading 7 micros. And I immediately flip bearish. Same candle, I'm flipping bearish, stops at these highs, and I'm targeting these lows down here for 94 points, 2.14 R trade. I knew that either this gets respected and we continue going higher, or the more higher probability thing, we respect this 15-minute after we tap consequent encroachment, which is the equilibrium of this fair value gap, and we end up displacing lower, which ended up happening. It absolutely cashes. It banks in a couple minutes from 7:11 to 7:20. It was 9 minutes. I'm gonna throw the executions on the screen right now. We were in this trade. It wasn't that long. We ended up taking full TP. I'm pretty sure I took 6 contracts off and then I left 1 runner. And this runner is what I wanted to make the video about because this was a banger. This ended up being a 200+ point trade because I ended up holding. I wanted to see us actually get some displacement down towards equilibrium of this range, as well as potentially going towards OTE of this entire range. So I'll zoom back out for you. In this entire leg, in this entire range, we have equilibrium resting below. We're respecting a 15-minute, so we have low resistance lows that will take us towards equilibrium, and we have low resistance lows, relative equal lows, sitting right above OTE of this price leg, so we can displace through that as well, tapping that before we get any bullish reactions from that. I'm looking at that, I'm like, okay, that looks beautiful. So I always know I want to hold a runner for these types of situations. We're clearly respecting this high up here. We're displacing at a new week opening gap. We're respecting bearish PD arrays. We're disrespecting higher time frame bullish PD arrays. You're kind of just adding everything together in your head. You're like, okay, clearly we're not bullish. We have no signs of switching bullish. I have no reason to flip my bias again back to bullish. So let's try and ride this out as much as we can. Price is clearly dumping here. Let's try and get the most out of this, right? And we ended up displacing all for the rest of the day. I think I was in this trade maybe an hour. We ended up edging OTE, like crazy work. Like I had a limit order sitting right here, and I think I was sitting on the 2 minute here. After we edged OTE, I moved my stops down to this body low right here. So right there, this is where my runner was. I'm gonna make it red. We ended up getting stopped out, manipulating this high inside of this gap to then of course dump back to OTE. What turned from originally a 93 to 94 point trade ended up being a 216 point banger. I'm gonna throw the trade up on the screen right now. The executions are on there as well. This was easily one of the best trading days of the summer for me. Even though I took this loss, I was able to rationalize why and still be able to flip my bias in real time, understanding that this is a high probability PD array that I want to see get rejected out of. If not, we are going to displace through it and continue back bullish back to our highs. But because we got a large displacement down in the morning, 200 points to be exact, I want to see this 15-minute hold. And once it showed me that price is going to continue bearish, I was able to flip my bias and cash in on the day. That's about it, man. I want to reiterate for all my athletes, for anyone out there who's watching, this shit is real. This shit is possible. It is not hard. Yes, it is simple, but it's not easy. It's just about getting your experience, getting your feet wet in the markets, being able to read price. And once you're able to read price and step back, and what I mean by step back is taking your emotions out of it. And the way you take your emotions out of it is understand that you need to be okay taking a loss. And that's pretty much it. When you overtrade, over leverage, revenge trade, do all these things that are emotionally tied to the charts, it's because you're not okay taking a loss. And once you're okay taking a loss, you're okay with not even trading. Once you feel like you need to trade and need to press the button, then you're fucked. You're cooked, you're chopped, you're screwed, you're fried, you're stir fried. Right? But once you go into the market saying, I don't need to trade, I want to fade as much as I can. I want to fade. I want to be Michael Jordan in the post, shooting fadeaways. You want to be MJ on the charts. I'm gonna start saying that. You want to be MJ on the charts, because once you're MJ on the charts, you don't care about chasing. You don't care about late entries. You just look at it objectively, like, okay, I took a loss here, that's fine, but do I know where price is going with the high probability? Yes. Is this part of my model? Yes. Am I getting a higher time frame rejection out of a PD rate? Yes. Is there draws on liquidity lower? Yes. Is this even a position for me to hold for a runner in case we get lower prices? Yes. Like, everything's gonna match up in your head once you stop worrying about things that are outside of your control. Like, how much money am I gonna make? Am I gonna get a good price action? Like, you're just read price for what it is. You're gonna be so much better off. With that being said, I am 2 days into my funded futures rapid. I think it was the rapid eval. I need one more winning day of $1,000 to pass. We'll see if I get that. If not even that, fuck that. I'm taking my time for the rest of this eval. I'm not giving myself the chance to mentally screw myself. So only need $1,000 more to pass the eval. Then we're going straight to the funded. Then we're building this buffer and we're getting these daily payouts. I'm glad y'all stayed to the end. Make sure to comment and like the video, bro. It's been day 4. We've 4 days in already. I'll be back at it tomorrow. Peace.